Hello ladies and gentlemen, my name is Nick Evdokimov. I'm an expert in the sphere of cryptocurrency and blockchain. I would like to present to you a series of videos that will be devoted to investments into ICO tokens and blockchain startups. As I have accumulated some expertise in this field, I would like to share it with you, starting with how the market was originally built and how it operates today. 4.5 years ago, I started mining in the field of cryptocurrency, and it was, to an extent, a spontaneous decision. My attempts of investing in this field at this time were amateur at best. However, time allowed me to understand this sector, and over the years I managed to build an interesting and profitable portfolio in the mining area. Then about 2 or so years ago, I started looking closely at the ICO market and slowly began to take part in it. At that time, there were very few startups in the ICO sector. As there were just a few startups entering the market, there were a few choices about which startups to invest into. Today, there are thousands of ICO startups on the market with hundreds more that have announced their opening dates. A few years back, the main principle by which an investor could participate in a blockchain startup was through venture capital, meaning that he or she could just make a financial investment to receive a share of a startup. Now, however, there is a new system of ICO in place that gives us new techniques and opportunities of investment. These new techniques help our investments to be more manageable and more efficient. Now let's make a simple comparison of a few aspects that differentiate the principle of venture capital and the principle of how ICO works nowadays. Also, we will take a look at the tools you have at your disposal in blockchain. Earlier, in order to analyze a startup, a potential investor had to conduct a detailed analysis and understand the essence of business he or she was intending to invest into. While these principles are certainly preserved in an ICO startup, there is a new criteria to determine which of the tokens has the greatest potential for growth, and accordingly we want to talk about this. Now I would like to concentrate your attention on the difference between the principles themselves. Let's imagine an investor wants to become a shareholder of a blockchain startup, or any startup for that matter, meaning she wants to make a venture investment. What happens in this case? He or she acquires shares in this particular startup and as a result will receive dividends. For example, if he purchased 2% of the shares in a startup and after the startup launched with a stable income of $200,000 a month, if dividends are dispersed monthly, then she will receive $4,000 in monthly dividends. These dividends he or she will receive until she decides to liquidate her shares with this particular company. The company is purchased by another entity, or the company into which the investment was made conducts an initial public offering, also known as IPO. That's how it works today with investing the funds in a startup in a venture case. On the other hand, what happens in the case of ICO? If the token is built correctly, in which case will you be the most protected as an investor of tokens? Now briefly, I would like to give an example of a cash flow in an ICO startup. 100% of profits of which are aimed at buying back tokens from the token holders and destroying them, leaving fewer tokens in circulation. As a result, supply and demand is created. In this case, as in the first example of venture capital, with ICO we see the same process in the first illustration. 100% of cash flow is distributed between shareholders. In the second example, between the token holders. How does it work? In the case of ICO, we understand that we, shareholders, have not 10 but thousands of tokens, and accordingly everyone owns a certain volume of them. Imagine that 2% of shareholders own, for example, 15% of tokens, 30% of shareholders own 8% of tokens, and so on. What happens in this situation? Each of the token holders has his or her own ambitions about the profit that he or she wants to receive as a result of their investment. Let's imagine an investor decided to buy tokens and liquidate them at 5 times his initial investment. This means the tokens were sold 5 times more the value than brought during the ICO. Together with him, the same decision was made by 1% of the investor base. The next 2% of investors decided to liquidate at 15 times the initial investment. Another 6% decided to liquidate at 22 times the initial investment. What happens in this case? If all 100% of the business's cash flow, its income let's say, it's a commission-based model. A transaction is made, revenue is taken from it, and this income is aimed at buying out the tokens, which means to conclude business with crypto holders and destroying these tokens to create demand for them, reducing their number, increasing demand. In this way, we come to know that the dynamics by which we increase the capital invested by the startup. Basically, what happens? If we are the 1% of investors who decided to liquidate our tokens at 5 times our initial investment, That is, when the time of payment of dividends comes in the venture case, our dividends are distributed directly proportional to the volume of shares owed by us, the shareholders. We see here that ICO dividends are not equally distributed, and if we have 1% of token holders, conditional price for tokens of our ICO on the market now. This means that 100% of the company's dividends will be aimed at buying tokens from only 1% of investors. Here we clearly observe that each token holder has two factors to consider. On one hand, the investor needs to decide what yield he desires to receive back on his investment. On the other hand, the token holder has to decide when he wants to liquidate his assets, meaning he needs to consider risks if he is to hold onto his tokens in hopes of receiving higher yield on his investment. That means in the venture case, the investor entering the startup understands that he will be there for a few years, and only then he will be able to liquidate his assets, even though he can sell his shares with an IPO or exit through a strategist. Contrary, in the ICO case, the buyout of tokens is executed daily, if not hourly. That is to say, these dividends are distributed constantly, which is a completely different approach. What happens in general in business transactions? All of the company's profits are focused on buying out tokens from the crypto stock to settle the relations with the token holders. So, if we have a pool of investors who are ready to invest at the 5 times the original value of the token, that is the lowest price for investing on the particular day. Let's say that the token at the time of the placement on the ICO was worth $1, and today the cheapest price for the token on crypto stock is $5. All 100% of business income is aimed at buying out these tokens and taking them off the market. Now we have an idea on how this principle works. In the case of venture capital, there's an equal distribution of profits, but in the case of ICO and with tokens, the distribution occurs exactly in proportion to the ambitions of each of the investors at the moment. Again, take another completely different group of investors who decide to receive 40 times their initial investment. That means they invested at $1 per token and want to sell them for $40. This group of investors observes the business model and understands that these returns are realistic in a year and a half, that the growth of the user base will be like this, the turnover is like this, and the profit growth is like this. Accordingly, buying all the previous obligations at the price of 5 times, 8 times, 15 times, all this happens beautifully and well. And in order to reach 40 times, it will take a year and a half. This decision an investor may make, but is not set in stone. If he sees that the business has risks, say competitors have come to the same market and offer the same product better and cheaper, then the investor can say he is no longer willing to sell his tokens at 40 times. If the token price that day is at 12 times, he can liquidate his assets at 12 times his initial investment. Here are the differences between investing through the venture capital mechanism and investing through the ICO mechanism. To point out one of the major differences is that the entry level into crypto can literally be $100, or $5, or $100,000, relatively an insignificant amount. The entry level into a venture investment is measured in hundreds of thousands of dollars and frequently in millions. Another difference is the flexibility and liquidity of assets. Since in a venture capital investment, the investor understands that his returns on investment will only be in the form of dividends, and after an exit strategy in a number of years, he or she must accept the fate of their investment for a period of time, often years. This is not like the case with tokens. Today an investor can decide to invest into tokens, and tomorrow change their mind. Therefore, ICO startups have two significant advantages: the entry-level threshold, flexibility, and there is also one more: the speed at which investments can be liquidated, meaning the structuring of the transaction in the ICO does not take much time, whereas the venture process takes a month or more. In addition, the closing rate of ICO transactions is instantaneous implementation of tokens on the crypto stock. Now, as for disadvantages of investing in ICO and advantages of venture capital. Venture capital investments are generally more secure because in a last mile your ownership of shares in a legal sense are the possessions of a venture. This scenario offers more protection than that of tokens. Therefore, during the course of these video sessions, I will lay out in the form of a set of video materials the ICO investment principles which will allow an investor to reduce risks and increase profitability. Let's look at the specifics of choosing an ICO when assessing its effectiveness, the potential of investment attractiveness. The basic factors to consider when choosing a venture startup or ICO are the same, clear and transparent. For instance, whether the product of the company is interesting is an important factor. Another factor to regard is the startup's dedication to the cause. Next factor to think about is how much the business model itself is stable for investment. These are the questions that must be asked whether in venture capital or ICO investments. However, ICO has a whole specific set of questions and concepts that a potential investor needs to have a good understanding of. Then his investments will be maximally protected and profitable. To begin with, what is the goal of an ICO startup? Of course, the startup always has two goals. The first is funding. The second goal is user acquisition. Any experienced ICO investor is well familiar with these principles. The subject I would like to focus on is directly connected with the success of ICO startup, which is the intersection of the audience of the token holders with the potential audience of the startup. If the intersection of audiences is maximum, then ICO solves two problems at once. Why is it important to solve this intersection problem? Because ICO is the most significant advertising company during the existence of this business. We must understand that the startup itself uses the resource and time with maximum efficiency. Therefore, that the higher the intersection between token holders and potential users is, the better the results of both the ICO and the startup will be. One of the most important indicators of a promising startup is this particular intersection. There is a number of token holders who possess cryptocurrency. If this particular group of investors is the target audience of the startup, it is suggested that the intersection is at maximum. Another important factor to consider in the ICO startup is the introduction of innovations into the blockchain and the implementation of it in the world. First of all, it is said that if we have a token tied to a startup only for the purpose of releasing tokens, it is not an implementation of a blockchain. Also, if the startup can be implemented without blockchain, then this is not an advantage for its investors. This is important because if a startup brings innovation to blockchain, then it has a high potential on the market, attracting the audience of blockchain users, causing maximum interest, and increasing the volume of crypto investors. If the blockchain is in the center of the business model and operates on its principle, then this is the best and most optimal option for the investors. And last but not least, factor in the token economy. In future videos, we will explore this topic more in depth. Token economy is built on the fact that there is always a balance of supply and demand. As investors, we must work with supply, analyzing how it is arranged inside the startup. Also, we need to analyze and create token demand. Thus, we are always working to ensure that the demand for tokens grows and their number in the circulation is reduced. These are the main aspects, and we will look at them more closely in the future video sessions. In summary, the main factors are basic: the user base intersection with potential token holders, the implementation of the blockchain within the startup's business model, and token economy as in the principle of supply and demand. In a few words, I will try to draw your attention to the principles that you should use when choosing an ICO. The first principle: is there a need for this product on the market? The second: is there an issue that the startup solves within its business model and economy? The third: are the team players within the startup able to integrate all of the above and turn it into a single mechanism? As we can see, here we find very few differences between ICO mechanisms and venture capital. The depth of analysis under a venture investment should be maximized, as the risks that come with a startup last for many years ahead. Therefore, for you to assess what may be in 2 or 3 years will be very important. In this case of ICO, this analysis can be mediocre, and you can superficially analyze a startup and already make a decision that for a half year this startup will develop well and will have positive outcomes. Then you will have enough opportunities to change your decision and adjust in the process. So, this flexibility, which is transmitted by the ICO mechanism, is very useful. And finally, as an announcement, here are some of the topics we will be covering in the video series to come. The token economy. Token economy is what we will pay most attention to. The analysis of the token economy is key to successful investments and for them to grow tenfold. This very topic we will discuss in coming episodes. Also, we will talk about supply and demand and the strategy of reducing the amount of tokens in circulation. We will also discuss how to properly analyze the ICO documentation process and what information should the documentation provide. We will cover the necessary questions to ask a startup, as well as how to analyze the startup's core team members in order to minimize any potential investment risk. Of course, we will also cover the mechanisms by which we secure our investments, including the classic purchase of tokens and the execution of so-called mixed deals by which an investor is able to secure his or her transactions. Over the course of our video sessions, we will put together the full picture of an ICO and blockchain investment, so as a result, an investor will be able to invest wisely in a highly profitable and low-risk manner. This is my goal for these video courses covering this material. Due to the nature and complexity of this topic, I plan to conduct several sessions a month with as many as a session a week, by consistency of related and relevant topics in this sphere. It is my hope that you will be more aware of what is happening in the market of ICOs and will be up to date in the events occurring in the crypto investment community. In conclusion, I would like to point out that we are at the crossroads of investment as we know it. The world that we live in is moving more and more towards cryptocurrency and blockchain. These changes that blockchain has introduced to us are very serious and go far beyond the limits of investments. The cryptocurrency movement is the wave of the future, and if we are wise investors, we will soon realize the opportunities blockchain offers to us. If you have any questions or would like more information about myself or the topics I have covered, please do not hesitate to contact me at evdokimov.com. Thank you for watching, and I will see you in our next session.